Hey everybody, this is Shanine. I am doing a complete day trading strategy video on today. This may be my longest video, so bear with me today. So first things first, this can be done on any charting platform. And we're going to add our indicators first. So whatever platform you're on, go to your indicators and add the moving averages first. So if you like simple, you can add the simple. And when you add it 3 times. And once you add it, you are going to make one of them the 13, make one the 21, and make one the 50. These are Fibonacci moving average numbers. If you are on Thinkorswim, you can add the daily open indicator, and it's right here. Just type in daily open, and then you can make it whatever color you want to make it. This strategy is built around this indicator here. So basically, you're going to have your daily open line if you're on Thinkorswim, and I think TradingView has that indicator as well. You're going to have the 13, the 21, and the 50. I have the pre-market indicator. If you do not have it, you can just go to the pre-market and then plot your pre-market high and your pre-market low. And I have the volume on here, and that's it. So that's step one, adding the indicators for this breakout strategy. So what I do in the morning is I look at the price. So QQQ is showing right now 319.36, and I'm using on demand, and this is May the 4th. So what I'll do is I'll go to my options chain and I will find my contracts. So QQQ average true range is about 1087. So what I do is I add 10 and subtract 10 to find my contracts. So since it's 319, I am going to subtract 10, and that will give me 309. So I'm going to copy the 309 put, and I am going to place it on my contracts watch list. That's the wrong watch list. So I have a watch list called contracts. And so I will add 10 to 319, and that's about 330. So I will copy the 330 put. And when you do this, you can also see the open interest kind of lines up with the way I use this strategy. So I do all of this before the market opens. And of course, the prices fluctuate because sometimes the market flushes in the morning. So then I'll just go up a contract to get closer to the money. So once I've done that, then I'm going to go and just check the overall stock during pre-market. So right now the stock is showing that it is under the 50. It's right at the 21. And then the 13 is kind of in between the 13 and the 21. So once the market opens, what will happen is, and I'm going to go ahead and press play. What will happen is the open price indicator will plot, the pre-market levels will plot. And I have my active trader connected to my contract watch list. And so it's about 2 minutes until market opens. And when the market opens, we're going to look for rejection or support areas around the open daily indicator. And before the market open, you should already know how much you want to invest. You should already know your profit taking area. You should already know um, your exit, your entries, and so forth. So when the market opens, I tend to use the 3-minute time frame, and I fluctuate back and forth from the 3-minute to the 5-minute to see what's going on. This is a momentum strategy. So in order for the strategy to show a very strong momentum, all these candles need to be above all three indicators for a call, or all needs to be below all indicators for a put. So it has to be below the open daily, the 13, the 21, and the 50 to show very strong momentum. The price cannot be in between like here. That's indecision. And so we got about a couple seconds for the market opens. And I'm going to trade 20 contracts. I have my trading bot set up for 20 contracts to buy, to sell at 50%, to stop me out at 55%. And I'll move this up. I just do 55% to start off because of how the price fluctuates at open. And now the market is open. So now we're just waiting for our open daily and our pre-market levels to plot. During this time, you should be breathing, taking a breath, or you need to just get up and walk away to keep from jumping into a trade. Then do those things to help, because once the market opens, the blood gets to pumping, the mind gets to racing. Okay, so now we have our, that's why I change it from the 2-minute, 3-minute, 5-minute back and forth so I can see. So right now we have the 13 and the 21 pinching tight. We have the price under the 50. And once it goes under the open daily, we have momentum. And so I kind of trade a little bit feisty because I know it's under the 50. And I also know that price is also under the pre-market high. I will go ahead and jump the gun because it didn't make it above the pre-market high. It's closer to the pre-market low than it is the pre-market high. And I just got filled for 20 contracts. I will, if price fluctuates and get cheaper, I'll get filled at 45 cents, hopefully. If not, I won't worry about it. So I'm in at 51 cents. Right now, price is showing 49 cents. We're still under the open daily. We're under the 13. The 21 is very tight. Let's see what the volume looks like. The volume is showing selling volume. So I have my stop loss set. I have my take profit area set. And I am going to move my stop loss up. As price goes up, I will move that up. And doesn't look like I'm going to get filled on these extra 20. And that's called scaling in. If I know I want 40 contracts, I'll try to scale in, but it doesn't look like it's going to come back my way. And then it may, who knows? And then if we drop below this pre-market low, that shows even more momentum. Right now I'm up 9%. And to keep me from panic selling, what I tend to do as well is I will take my rectangle and draw. So price needs to get above the open daily line for me to exit this position. Or price needs to close above the 31 for me to exit this position. And I'm going to move my stops back down because price is fluctuating and I do not want to get kicked out of my trade. And I guess I can try to see if I can get in at 53 right here. I doubt it though. So right now I'm at 16%. You can do your exits by percentages. You can do your exits by levels. So if price was to reclaim this level and take off to the upside, then that could be an exit area right here. If price reclaims the 13 or the 21, that's the exit point. And I don't think I'm going to get filled at these extra 20. I'm up 20%. And then what I'll do is now, as price continues to drop, make lower lows, I'll keep moving my rectangle so I don't panic sell. Because I used to watch this up here, and as I see price rise back up, I would panic sell. But there's no need to sell. It's just the activity that's going on in this one candle. And so we just need to wait for this candle to close. I got filled. Yay. So I got an extra 20 contracts. I just don't want to get stopped out though. I want to close the stop. And now I am down 1%. As long as price does not get over this level, I'll stay in the position. Price is finding support here and it has resistance here. So we have a little bit of buying volume. And now I will go to a different time frame. As long as I'm under the open daily line, I feel confident. Now I'm back up 8%. And remember, when you see red, it's best not to look at your P&L. It's best just to watch what's going on right here. Don't look up here. Don't look at your P&L. Just look right here at your chart, at your candles, and see what the price is doing. and check your volume. Volume and your resistance and support. That's what your focus is when you're managing your trade. And let's see what the market looks like. Not too strong. Let's see what Tesla looks like. Tesla's only up $5. Microsoft up $2. Amazon down $26. Market looks pretty weak. And I'm back down 2%. And I'm going to go to my 5-minute chart now. Now I'm up 6%. It's still getting rejected at the 13. I'm up 9%, which is $200. I think I'm going to take some off now. Let's see if I can get one more red candle, and then I'll take some off. So another way you don't panic sell, if you sit and watch the candle, as long as this candle closes red, okay, just say to yourself, okay, I got patience to wait one more candle. Let's see if I can get one more red candle. And here, let's see if we get rejected right here at this pre-market low again. You see how it can't get above this open daily price? That's why I like this indicator. And most say wait 15% before, 15 minutes before you get into the market in the morning. It's up to you when you wait. It's up to you when you get in. I just find in the morning sometimes you get cheaper prices. My average is 52 cents now. So we've got rejected 1, 2, 3 times. I'm going to move this support level back up here now because it's touching here more. Market still looks weak for this day. So we got another red candle. So let's have patience for one more red candle. And if we get one more red candle that makes a lower low, I'm going to take 10 contracts off. Another reason why I was so confident getting in at the open is because price was already under the 50. So once the market opened and price was under the open daily, that was my second conviction. And I also check the 7-minute time frame. 7 minutes showing the same thing, bearish. The hardest thing is the patience waiting for these candles to close. The 3-minute is showing chop action. So in this case, what I will do when I see chop action in a rectangle, I'll just put the whole price in the box, and then I wait for a breakout, and then you can enter to be safe. So if the market opened on the 3-minute and you was watching the 3-minute chart and you saw sideways action like this, you could just draw a rectangle and just wait for the breakout, because you can tell the price is actually trying to push up, but it's getting rejected by the 13 really hard. So you can safely wait until it breaks out of this range. It's going to be completely up to you. I'm just showing you the strategy that I use. That's very easy. Okay, we're back to the pre-market low right here. I guess you all can see these lines because I got them really dark. Let's see. If price was to get above the high, we would take calls. We buy puts below. Now you can see it. We're up 7% again. Let's see if we can at least get 20%. Let's see what the market's doing. Okay, Tesla's down $2 now, so let's see. A lot of people do not watch the pre-market action, but the pre-market levels I have found to be helpful. This is the high, this is the low. The price could not get back above the high. We're up 9% now. And let's see if we can get one more red candle. Let's see if we can get out of this box. And you see how all the candles are underneath 1, 2, 3, and 4. Actually 5 if you want to count that one. So we have 1, 2, 3, 4, 5 reasons to be in a put position. And then there's not much buying volume. Okay, I'm up 6% now. Let's see if we can get 20%. Over here, I have exit at 35 to 70% or exit if price reverses. So if price was to reverse and reclaim the pre-market low or reclaim the open daily, then we would get out of the trade. Or if price closes, a candle closes over the 13, we would exit the trade. Okay, we're up 8%. Now we're up 10%. Let's see if we can get 10 more percent. If these 3 EMAs were going through the line, through the candles, if the open daily line were going through the candles, we would not be in a trade. You don't want to take a trade if the EMAs or the SMAs, whichever you decide to use, are going in the middle of the candle. They need to be all the way below or all the way above to show strength or momentum. Let's see if we can get one more green candle. The market's getting a little strength, not a lot. We have support right here. We can bring our resistance down because right now it's just resisting the pre-market low. Now we're back down 4%. And if you're scaling into a position, you can actually scale in at every rejection point. So if you wanted 20 contracts, you could have bought one here, one there, just at each rejection area. And let's see if we can get another red candle. We're up 9%. I think I'm going to go ahead and take some off so we can just shorten this video. Let's see, right now the ask is 57 cents, so I will put an order in for 57 cents for 10 of them. And then I will put another 10, let's see, right here at 60 cents. Or shall we be a little greedy? And Tesla's dropping. The market's pretty weak. on this particular day anyway. Because today is Sunday. I was sitting here watching Tyler Perry's sisters and doing a little pedicure, a little self-care Sunday. And so I figured I would do this video. Someone asked me to do a day trading strategy video. So I am doing it in between my self-care. Okay, now the stock is breaking on down. So I'm going to, let's see, I'm going to cancel all sale. And let me sell 10 at market because for some reason they weren't filling fast enough. So we're up $535. So 10 of them are sold. Let's do another 10 at, let's see if we can get 70 here. Okay, there's a big red candle. We're finally out of the box now. And then Tesla's down almost $5 now. So now let's see, let's get rid of 10 more here. We're done being greedy. We got our candle out the box, so let's stop being greedy and take profit. We're out another 10. All right, we have 20 contracts left. Let's get rid of 10. Let's see if we can get them out at 70 cents. And then I will do 5. Let's see. Let's see what happens next. So now we're focusing on this one candle. We don't want the price to get above that level. I'm going to sell 10 more somewhere. Let's get rid of 10 right there. Or let's just cancel all and let's get rid of 10 at market. Because we don't want the market to reverse on us because I see volume coming in. And we have 10 left. Let's get rid of 5 here. Well, let's cancel that and let's try to get rid of 5 at market. Okay, we got our 21%. And we have 5 contracts left. So we're going to get rid of 3 more and then we're going to let 2 ride until we see reversal. Let's let this candle close and another one open. So we're at 27%. I'm going to get rid of one. I want to sell one for 70 cents. Let's see if we can get one more red candle. And then I'm going to close out all the positions and hopefully this video helped somebody. Okay, we got 4 more left. We're up 35%. And all we're doing is just watching the candles being rejected. That's all we're doing. We're watching the volume and we're watching the rejections. And we're just praying for more red candles. And as long as price didn't go back over the pre-market low or close above the 13, we had no reason to exit the position. Even though sometimes we were down $40 or $60, we were watching the price action along with watching Tesla and the market. So we have 4 contracts left. We're up 560. Let's see if we can get to $600 today. Then I'm going to go and enjoy the rest of my day. I hope everyone had a great weekend. I hope this video helped someone this week doing their trading. If you have any questions about anything in the video, don't hesitate to ask me. I hope I didn't leave anything out. We're at 42% now, and the percentages is going to be based off you. So I put 35 to 70%. I normally get that much if I get in at open. If all the conditions are met, I can get at least 35%. We're at 38% now, and we just hit 40%. So trading the open is tricky and scary and very risky. So use this as educational purposes to not jump in at open, but to have a reason to get in at open. The cheaper prices are at the open market. I paid 53 cents for this contract. I think the cheapest it went to maybe was 50 cents. So it fluctuated from 53 to 50 cents the entire morning. Okay, we're at 43% now. We only have 4 contracts left. So I guess I will try to take off one at 75. If I can get one at 80. So I can close the video out. And TradingView has the rectangle on their app too. It's just over there. You'll hit the paint button and then go to the rectangle. And since we're not getting fill, we're going to cancel those fills and we're going to just sell market. I don't use sell market in real life because normally I can get filled. Okay. I want to get out at one at 80. Can we get out at one at 80? Let's see. If not, we only have 3 contracts left. I'll go ahead and sell another one because we're at 45%. We will way over our 35% mark. So and I guess I'm going to do a sell market for the last 2 and end this video. If anybody needs help setting up their active trader, just let me know and I'll do a video for it. All right, sell market, and we're done with this video. So I hope this helps someone. If you want to learn how to day trade using Thinkorswim, just set up an account. It's free, and then use the on-demand button, and you can go here and pick any date that's already passed. You can't day trade on here during market open hours, but you can pick a date in the past, and then just put the time frame like you would put before market open, so you could prepare as if the market was about to open, and then make sure you hit enter. Because if you don't hit enter, it don't always change the time frame for you. And then hit the go button. And that's how you use this. And then you can just save it as your virtual workspace. So whenever you want to practice, you have your workspace already set up for simulated trading. And I hope this was helpful, you guys. See you on the next one. Have a great trading week. Bye.